Welcome back to Power Lunch, time for Trading Nation, and I'm Sara Eisen. Chinese internet stocks in the red today, quickly reversing an early morning rally led by Alibaba. These stocks have been pummeled, bear market territory or worse. Should you buy here? Mark Tepper is with Strategic Wealth Partners. Mark Newton is with Newton Advisors. Mark, how do the charts look?
Which Mark?
Oh, Mark Tepper, excuse me.
So Chinese stocks in general are they're having a rough time because the investment climate in China just isn't favorable. We do like Baba, though. I mean, they're growing faster than Amazon, and they're priced at 1/3 the multiple. So that, to me, signals that this is a good long-term buy. I mean, you know, they just posted an awesome quarter, beating on both the top and bottom lines. The stock is still down, though. They showed that they're not affected by the trade war, and they're still down. Their earnings really showed that the Chinese consumer is actually still strong, but what I think it's suggesting is that there's fears of the Chinese economy on a going forward basis. So our thoughts are that, you know, overall weakness in the Chinese economy, slowing retail sales, and a weak currency is going to push all of these stocks even lower. So we would not be buyers right now, but we do like the long-term prospects for Baba.
We're just going to say whether they deserve it or not. Mark Newton,
right.
Clearly, Mark Tepper paints a pretty negative picture around sentiment. They're a proxy for what's happening with China. Would you touch these stocks?
Yeah, I think we're getting close to bottoms in these. I mean, many of these are already off between 17 and 25% just in the last few months. And what's interesting is you note that the dollar started to turn up pretty sharply this spring, and that directly coincided with Chinese equities starting to lose a little bit of luster. So we've seen a lot of pullback. Just in the last couple of days, we attempted to bounce. As of today, that looks to be failing. Many of these are moving back to multi-day lows. Near term, I still see the chance for weakness, and particularly in the next 3 to 5 weeks. But many of these are down to pretty decent levels. So with Alibaba, for example, like right down near 175, 176, or Baidu right near 200, or Tencent gets down right near $40, and many of those are really attractive levels to consider buying technically. So I don't think necessarily the worst is over, but I do think there's a bottoming process now at hand, and that the dollar, if it starts to pull down, then that should really help a lot of the EM space, in particular China. So I think a lot of these names do deserve consideration for an intermediate term trade on the long side, but you have to be patient.
Yep, and watching the dollar, as always. Guys, thank you, Mark Newton and Mark Tepper. For more Trading Nation, you can head to our website or follow us on Twitter at Trading Nation.
A good first step of any risk management strategy is to determine the amount you're willing to risk on any given trade. Some traders use the 2% rule, where they try and limit their loss on any given position to no more than 2% of their total trading capital.